Hello, it's Ashley again from the Traders Circle. A couple of technical issues yesterday. Turns out that the video I uploaded, although I can hear the audio on my side, doesn't seem to be translating to YouTube when the video is uploaded. So, don't know what's happened there. I'm going to leave it on there for those that are on the morning call. I've spoken to a few of you about it, so you can watch the video without the audio and you'll be able to make some sense of it. But I am just going to do a shortened version just to get the message across for those who are following us on social media and are not part of the call. So really, I just want to do a quick recap. This week isn't necessarily about trading. There may well be a lot of opportunities a lot of pending opportunities. There's a lot of things that we have got our eyes on, and I'll go through the hot list shortly. But I just wanted to make a point really on how much data, how much high impact data there is due this week. Now, Monday was quite quiet. There was nothing. I filter my FX book and Forex Factory, and all I'm really interested in is the medium and high impact data. I do occasionally look at the low impact data. It doesn't tend to move the market so much. So I just want to try and tidy up my charts and my data feeds as much as possible, just to otherwise my phone will be beeping all day. So my phone and computer will be beeping all day. So I generally just look at the high impact and medium impact data. Okay, so looking at the calendar, there's little news. There's very little news on Monday. There was no medium or high impact news, but we've got a very busy week ahead. There's going to be some big news and potentially lots of setups for us. This morning we had the yen pairs that were affected with the Bank of Japan issuing its outlook report and monetary policy statement. Sorry about that. I just wanted to refresh. My calendar just to get the results up here. So medium impact data for the Aussie this morning came in quite negative. Not really moved the market too much. There's a bit of momentum beginning now, so this could well break these levels now and come short. But I think with the data that's due over the coming days, which I'll walk through in a minute, we've not really got the moves that we anticipated. So the markets will likely be taking a pause just to wait for the rest of this data to come out over the course of the week, where we're most likely to see some big moves in the market. So Wednesday's a very busy day. We've got very high impact news from all around the world. We've got the Chinese manufacturing PMI, which can affect the Aussie and the New Zealand. So again, maybe the Aussie's going to be hang fire to see the outcome of that. We also have data coming out from Australia, Canada, and the big news that the market is waiting for from the US. Are the Fed going to cut interest rates, and if so, by how much? And more importantly, what details flow out from the FOMC statement? So that'll be interesting to see how that moves the market. So Thursday, we've got lots of pound news as well, which will most definitely move the pound pairs. We have the Bank of England official bank rate as well. Not likely to go up or down at this stage. We've got the monetary policy as well. Again, we want to hear what the inflation report says too. And obviously together with the Bank of England Governor Carney's speech, all about the current climate, and couple that with the ongoing tensions surrounding Brexit, we can count, as we count down the clock to the 31st of October deadline. And then really to finish the week on Friday, there's more high impact news, starting with Aussie retail sales, Canada's trade bounce, and the biggest mover of the month, the US non-farm employment change and unemployment rate. So it was a very big week for data, so that will almost certainly move the markets. This is why it's important. It's really important to know this, because it's vital to take the fundamentals into account when trade planning, because it is the fundamentals that drive the market at the end of the day. So sometimes, as a professional trader, you can spend, it's always best being patient, understanding how this news affects the market, mapping your week out around the news, going to your charts, setting up your opportunities, setting your alerts, setting your trend lines, support and resistance lines, etc. And then it's a bit like fishing. You just want to wait for that data to pan out. And you're not always going to get a trade. You might miss a trade. There's one trade that I have missed. Well, I wouldn't say I've missed it. It didn't move in the way that I was expecting. It didn't give me the signal that I wanted within my profile, my risk profile, for me to take the trade. So the risk to reward wasn't in my favor. And yes, it's likely to continue going in the direction I anticipated, but I don't want to be entering the trade with the wrong risk to reward. So it's not just about spotting a technical trade. It's not about taking a trade just because it's going up or down. You have to look at the bigger picture, and you have to plan that, very importantly, around fundamentals. Last thing you want to do is get caught out in a trade, have a bit of sideways movement, and then bang, you're straight out for a loss, when actually if you just remained a bit patient, not only would you have made that trade a winning trade, but you would have got a better risk to reward. So you'd have gone into the trade with a slightly bigger lot size, and you could have come out for 5%, 6%, even 8% and more on the longer term trades by risking just 1%, rather than taking 1% and risking 1%. So patience definitely pays, and sometimes it's very wise to take a step out of the market to assess what is about to happen. And I can tell you now, this week is going to be very stormy indeed. So from experience, I don't want to be getting caught out in that. It's too stressful and it's not worth it. Right, so let's take a look at the charts. So I'm going to whip through these. Euro and New Zealand. So as you can see, at the moment we've caught some bids on this. Just want to go into how I do my analysis. So I'll repeat this most calls. If you want to learn more about how I plot out my trades, do my top-down analysis, set my trend lines, set my alerts, and then how I look at price action, then I am currently putting together a master training course, which will be available very soon. There's going to be a lot of free content on there as well, for those of you who just want a bit of guidance. But yeah, just feel free to follow me on YouTube and Instagram, or even drop me a line. So all I've done here in this case is draw out the long-term trend. So as you can see here, we've got one touch, two touch on the monthly time frame. It's just moves every so often. So we've also got the upper trend line. So this is the downtrend, this is the uptrend. We're currently creating a triangle. So that is the longer term time frame trend. So if we drill into the lower time frames, you'll see on the weekly and the monthly, you can see the long-term trend. And then what I want to do is create my outer trend. So how I do this is I look at the 4-hour and the daily. So if I just share on the daily first, we've got one touch, two touch, three touch, four touch. So the close yesterday came up to touch this trend. Now, if we drill into the lower time frame on the 4-hour, I drew my area of interest. What I was looking for, I wanted to see how price reacted at this level. So We just pan out a bit further. I was looking for short trades from this area, but the price action didn't offer me that opportunity. So if you look here, we've got a nice strong finish to this candle. And this here is, I wouldn't say it's a bull flag, but it is indicative of a continuation. We then traced this trend line followed by a breakout. So if we go on the lower time frame, we can see that pan out here. We've got bearish sort of pin bar, not really a pin bar, but it's a bearish close to this candle here, rejection of the trend. Came back to test again and again. This is all relatively bullish. And this is kind of compounding, ready for a break to the upside, which you can see. So if we just come out a bit further, look at where this rejected. So we've got a nice move up and rejection. We've got a nice strong bounce off that. Give me a second. So off this outer trend line, and you can see how price behaved. We didn't get that here. We've got a nice gradual move up towards this outer trend line. Yeah, we've got a nice compounding of effect where it follows the trend line nice and tightly. Yeah. Now the reason why it's done this is obviously the buyers were ready to break out, but also there was a bit of indecision leading into this week's data heavy week. Just bear with me a sec. So this kind of sign here where you don't get strong price rejection off the trend, this is indicative of a breakout, which is what we've got. And the only reason, so I was looking for short trades around this level, and I didn't change my bias to go long simply because of the news this week. Last thing you want to do is go on a breakout, get what's called a fake out, where price comes up, rejects, and then comes back down again. And that may well happen. Now, we've missed the boat. Yes, if you are an intraday trader, you may well have wanted to take the trade on this breakout here. So if we drill on the lower time frame, you look on the lower time frame, to be honest, I wouldn't have taken that. We've got a nice strong bar, a nice strong close on the 15-minute time frame above this trend. I would always look for a pullback to test the trend line and then a continuation. That's how I trade. If I don't get that opportunity, I don't take the trade. And the reason for that, it's just because it's discipline. If you don't stick to, a set of guidelines, whatever those guidelines are, if they work, then follow them. If you don't stick to those guidelines, you start to break. You start to develop bad habits, and you start going off in a tangent, and therefore your trade plan starts to falter because you don't have that process, that framework that governs your decisions. So for me, I'm very fussy in that way. So I drew my area of interest. I was looking for short trades off this entry. I started to get interested around this area here, but it just didn't happen, unfortunately. It's difficult to explain. This is where experience comes in. This is a bearish sign. We've got a nice rejection again, but for me, leading into the news, I wouldn't want to I wouldn't get involved in a short trade unless it broke this initial spike down here. So that didn't happen. Look, you see. So this here, this compounding of effect is bullish. Is a bullish sign. So this is the experience, and this is what I want to teach you guys to how to spot the psychology that's happening within the market. so that will add a layer of confluence, not just so that you don't just take trades purely off technicals and purely off fundamentals. So this week's very important, it's a very difficult week for traders, because what we have is the technicals trying to seduce you into the market, but then the fundamentals leading into the fundamentals, we've got the psychology, which you can see here, holding the smart money back. So the smart money knows which way this is going to go, and as retail traders, it's very easy to be lured into a trap. And if you're new to trading, you will have seen this, where you enter a trade thinking it's going to go in the direction, and then nothing happens for 2 or 3 days, and then bam, all hell breaks loose, and you think, what happened there? Where did that move come? And it's because the market is taking a pause in anticipation for these data releases to come out. So hopefully that's food for thought. So just to summarize, leading into a big week of data, understand that data. You can get that from Forex Factory, filter out the high and medium impact news, make a note of those. Same with MyFXBook. MyFXBook sometimes has reports that aren't included on Forex Factory, so it's always worth cross-referencing the two. So understand your data. There's a nice synopsis within each of those reports that tell you what the report's about and how it's likely to impact the currency market. So you can draw yourself a little template there. I'll probably draw one for you and put it on my website. But by understanding the news and when the news is ready for release, you can plan your week ahead. So plan your trades, set your opportunities, and give yourself strict guidelines on what you're looking out for. So design the trade, what you're looking out for under what you're looking out for technically, set your alerts, and if the market moves within those boundaries, then you use price action to then dictate whether or not you take a trade. And a good rule of thumb here is, if the high impact news is on Thursday and Friday, you've got Monday, Tuesday, Wednesday for the market to move within those boundaries and take the trade. Now the idea is you want to take the trade with very strict guidelines, get into profit very quickly. So you want a nice tight risk to reward, take 50% of the profit, and then move your stop loss to break even. And then the news may well either trigger you out for break even. So if that happens, at least you've taken some profit. Or you might well, and this will happen occasionally, you take full advantage of the major move that the market makes. And sometimes you can get 200-300 pips in a move. So that's a very nice windfall to have indeed. But never ever trade the actual market data. So never trade the actual fundamentals, because that's just gambling. So if I'm not able to get on a trade this week, what I will do, so what I mean by that is I've got set criteria within my hot list. If none of those opportunities come into effect prior to the news, then I'll just simply stand back and wait for the news to happen. And then what I do is I analyze the market after the news, and of course that presents itself with a completely different set of opportunities. So never chase the market. So that's the same theme for all of the pairs that I'm currently looking at on my hot list. Remaining patient. Let me just get rid of that alert. Just give me a second. I'm just remaining patient, letting the market come to me, taking into account the fundamentals that are due this week. And also we've got Brexit. Brexit is a very unique situation indeed, something that has never happened before, and with that presents some extreme risk-off attitude within the market. So that would translate into exponential moves in the market, extraordinary shifts in what's normal. So what you have to do in those circumstances is manage your risk. You just don't know what's going to happen to the market from hour to hour with the tweets coming out as the tensions build up between the EU and the UK, and an extension to that, America and China with the trade wars, and of course the conflicts in Iran at the moment. So you have to tighten your risk up. So for me, when the markets are, playing ball, I can risk sometimes 2% on per trade, because there's more conviction in the market. What I'm doing now is I'm only risking 1% for each trade, and as soon as my trade goes into profit, I'm looking for my first profit target, which can be between 30 and 100 pips. Once I achieve that milestone, I take 50% of the profit and I move my stop loss to break even, or a lock in small amounts of profit depending on where the technical layers are, levels are around my entry point. And then I simply ride the trade using the trend line. And again, I'll walk you through that in my educational modules in the Master Training course. So let me go back to my hot list. Euro USD, again, just going to whip through this one. I've got my long-term trade, long-term trend line. Be a bit more dynamic with TradingView. There we go, one touch, two touch on the monthly. Again, I've got my longer term trend on the monthly time frame, drilling to the weekly. One touch, two touch again. Now we had a very bearish finish to last week. Okay, this is very bearish. We've got a evening star formation, bounced off the trend line. This is the outer trend line, so that sits within the longer term trend. So we bounced off. Well, we didn't quite touch the outer trend on this occasion, but whatever happened in the market around this time caused it to reverse and come back short. So this would have been monthly or weekly support and resistance, which caused that. And there have been various news events at the time that just caused it to sell off. So we have the outer trend line. Okay. Inside that, we have the inner trend lines. So as you can see, the short-term trend is to the downside, but the longer-term trend is kind of up at the moment. So the longer-term trend at the moment is up. However, if this breaks this longer-term trend, what we will be looking at is, in the bigger picture, the trend is to the downside. So this could, this is a very important structure, because if it breaks this, we could be seeing, quite a longer-term move to the downside and potentially making a lower. Let's just draw. That's more like it there. A lower low using this as our longer term trend line here. So it's very important we know this, because we're at a very key level right now. So I'll just zoom back in. So understanding where the direction of the market is in the long term helps you then drill into what's going to happen, or what you think is going to happen in the shorter term. So if we then take ourselves away from that, we've established now that this is a very key area of monthly and weekly support. So it is going to take something quite negative for the euro to break through these areas. So this is why I've highlighted this region. I've set alerts above and below, and this is my highlighted region for taking short positions. So I'll just walk you through. So a few days ago, on the 25th of July, we got this doji. So it came back and touched this area, absolutely spot on. And then we finished in an indecisive day, followed by a bearish day. But again, we'd got a lower high on this pin bar. So we've ended up with 2 days here. One was bearish, one was bullish. So these two tweezer days here is indicative now of a bullish move. But we're not going to get any major moves yet. The data that follows this week will certainly move this market. So for me, what I was expecting is for this to come back and sort of hover around this monthly bar here, this monthly trend line, break, probably do a roll reversal, and then I'd be looking at short positions from there. Or what the most likely outcome now is we're going to get some kind of significant move either to the upside or the downside, depending on the euro data and the US data this week. So it's very likely now that I'll be sat on the sidelines waiting for that to manifest. I need to move this above now. So what I do with my alerts is I set my alerts above the current price and below the current price. And if you noticed here, I'm interested in looking at whether or not this next area of resistance is broken. Okay, because what that means is if I want to go long on this trade, I'd be waiting for a break above the next resistance, a retracement, and then a continuation. So if I want to look at these trades right now, if I was looking at short positions, I'd be waiting for a break below this monthly bar, and it'd be quite significant as well because of it being a monthly bar. There'd be a lot of sell orders accumulated, sell stops accumulated under this structure here, which would accelerate quite a big move. And then I would look for this to pull back. So something a bit like this. So we have the breakout. And then what we have is the roll reversal, which is the retracement back up to test these areas of support and resistance and trend line, followed by a continuation short again. So that's what I would be looking for if the euro weakens against the dollar, and if it's to strengthen against the dollar, I'd be looking for a break. What we might find is it come back to test this trend, this inner trend line, a roll reversal, come back to test areas of support and resistance such as here and here and even these local areas here, and then I would be looking for accumulation around this inner trend, and then what I would look to do is take a trade if I saw those opportunities using price action on the break of this inner trend with the view to accelerating it towards this outer trend line. And if we zoom out, you know, those two options are available, but it's a tricky one at the moment. We've just got to hang fire and see how this news pans out. And this again, underlying it, repeating this over and over again, why it's important to wait for the fundamentals unless you get the right opportunity against your trade plan that gets you involved into a trade where you can be risk-free, or, you know, only risking a small 0.5% or 0.25% of your trading pot, so you can then take advantage of the news and the fundamentals. So that's Euro USD. Euro pound. Well, all I can say about this, this underscores this move here is very typical of this exponential, well, not exponential, extraordinary event called Brexit. You know, we've had a significant move up with no real consideration to pulling back. We got a nice evening star formation here and a pullback towards this 8,900 level. Now, if you watch previous videos, I was short on this. I managed to take half my position out right on this level here, and then went to break even, which I believe is around these sort of levels here. I think it was just above the high of this. That would have where it would have been. Yes, sorry, the 90.55 was my hard stop. So so I took half my position out and left my stop loss around break even. And then look what's happened. This is all to do with Brexit. So what we've got now, if you can see my alerts, I'm monitoring price action very simply around this monthly support. Now this is an extremely significant area. If we get a break above this area here, we're probably going to see some significant strength in the euro. Again, this is all going to happen potentially this week, depending on the data that comes out. So what I'm going to do with this one is sit on the fence and wait. And at the moment, price action is not showing any signs of slowing down. We've just had a very strong close to this last 8-hour bar. If we drill into the lower time frame, we've had a strong close, a retracement, which we'll see if we drill down. And now it looks like we're making moves up again. 2-hour bar. See this retracement starting to form. Again, retracement, we've got a double bar here. This is all indicative of a bullish move. And that gets repeated on the 30 minutes. So we'll just have to sit and wait. So what I'm going to do now is move this alert back towards the highs. Now what we will see now is I'll have it just burst straight through. We don't know what's going to happen with this. Let's see if we've got a bit of a trend forming. So what we could look for. Kind of marries up with this 61.8 level if we retrace. But technicals is all out the window at the moment, guys. We've got fundamentals driving this, and a risk off with a pound due to Brexit. So yeah, sat on the fence here. What I will look to do is if we do get a break above this, it's not wise to just jump in thinking we broke this massive monthly support. Yeah, I'm going to go long. Wait for the move to finish. Let the market settle down. And then we would look for price action around these levels here. So what you'd look for is a move up, price to reject, and then reject off this monthly. And then you'd be looking at the retracement strategy to then continue off this trend here. There would be this is if it doesn't pull back from here. You'd be looking at sort of a trend. So price would sort of break, accumulate, break, and then follow this trend here then. So yeah, just sat patiently waiting for that. Euro Aussie. So this is the trade that I was looking for. I missed. So as you can see here, this is my highlighted area. It's a good example to go off actually. This is if you look at the euro pound pair that I've just walked through, this is kind of an example of what I'd be looking for there. You get the breakout of that trend line on the monthly trend line on the euro pound. So just go back to that. Yeah, let's just go back. So you get a breakout of this monthly, come back to test, and then off we go again. So this is kind of showing you exactly that. It broke out of that trend line. What I was after is a retracement. So looking at price action here and here, I was looking for it to pull back towards this zone here to come and test this trend. Give me, I'd then monitor price action, looking for evening star formations, tweezers. Just trying to see if we've got any here. Doges. There's another kind of signal. Just trying to find evening star. There we go. So this sort of pattern here. I'll just draw some out. So evening star, another evening star there, Doji's evening star, sort of. So looking for price action around this area, and then I would have looked to have taken a long position with my stop loss below this trend. But as you can see, it's just taken off. There's a lot of bids coming into the euro at the moment. This could be the market setting a trap. This could be very short-lived. Sometimes the market, you think that the euro is strengthening up, and you've got to think of this from the psychology of a professional institution. The smart money may well know something that we don't know, and the euro may well. If you look at the data coming out of the euro recently, it's been very weak. The ECB are looking to reduce interest rates and stimulate the economy again. So, people forget, the bigger, broader picture of fundamentals. So sometimes, you're led down a blind path, thinking, oh God, the euro is strengthening, I'm going to buy into it. It's a bit like the Pied Piper. The smart money are, in effect, setting up a position to get the best price. So if the data is negative, bang, down it comes. And what that does is it takes out all of the retail traders, that are thinking the euro is going to strengthen up because it's going up. But it actually gives the smart money a better price up here, or up these levels, so they can make a bigger profit on the way down. So sometimes negativity is priced into the market with either the strength or the weakness of a currency prior to the move in the opposite direction. So really, just to summarize this trade, this is a perfect example of how I set my trade plans up. The market did not come within my set criteria. The market didn't move within my set criteria. If it had come down here, so if I took a trade, say at these levels, my risk to reward, I'd be looking at 80 pips, 135 pips, instead of, say, 30 pips. So what that means is I can go into a trade with a larger, so my 1% risk with 30 pips is, in this case, going to be more than double or more than quadruple. So the risk to reward would be quadruple. So I'm risking 1%. I would have already been, so if the market had come to here and I would now have taken 0.5%, and I would be risk free on the trade. And what I would do next is 20-30 minutes before the news, I would then assess the trade, and I would look to move my stop loss maybe below the last swing low, locking in further profits. You see? So this is how you can plan your trade out using fundamentals. If you get the opportunity to get involved before the news, great. If not, stand back, wait for the news to occur, and then obviously re-plan your trades and look for new opportunities. But never rush in and never get involved. This one will hit home with you. Remember Bitcoin in December 2017? You saw the price moving up and up and up and up. Everyone's getting involved. And then what happened? Bang. Came all the way back down. And that's not because Bitcoin weakened off because it's the end of Bitcoin. It's just the institutions had made billions, if not hundreds of billions of pounds, and they were just selling their positions to cash in those profits to get a better price to then take the next wave up again. And I'm going to finish off with pound dollar. So this is pretty typical of all pound pairs at the moment. And the significance to this is, if I zoom out on the higher time frames, the monthly time frame, the pound is quite literally coming towards, its all-time low, which is pretty significant. It's been a difficult one to trade. Obviously, with the whip sways in the market, the news releases coming out, the change in Prime Minister, the non-star events, the difficulty striking up a negotiation with the EU, and quite literally the market are seeing the pound as risky. That could change at a drop of a hat. Now, the pound itself, the UK economy has been reporting pretty strong figures across the board. And even with that taken into account, we are seeing a weaker pound, which is good and bad news. The good news is we know the economy appears to be at this moment relatively stable. The ECB are not necessarily looking at reducing rates in the near term. They have been talking about increasing rates, but we will get a better indication of what they plan to do in the near to medium term future on what they're going to do with interest rates. My guess is they're probably going to take a neutral stance and sort of pin it down on Brexit, until we get stability and clarity with where we are going with Brexit. The Bank of England will most likely come out with a neutral statement. For good reason. How can you plan the future when you don't really understand what that future deal is going to be? We are increasingly heading towards a no-deal Brexit. So with that being in mind, we don't know what the aftermath of that is. So, and as a trader, you have to take that on board, and you can see that clearly written in the charts. The good news is, how attractive is the pound for buying once the Brexit ordeal is out the way? Now, my gut feeling is that we will resolve the impasse, make headway with Brexit. As soon as confidence comes back into the pound, we are going to see some big moves to the upside. But until that day, it's a seller to me. So the question you might be asking is, how do we plan to buy the pound? Well, we're not really at the moment. What we do is we draw out our significant key areas. So weekly and monthly supply areas, resistant areas and support areas. So that's what I've done on the chart here. And I set my alerts to tell me where price is currently. Now, just adjusting this alert. You look at this alert here, marries up with the next supply zone. Okay. Demand zone. So apologies for that. I just had the video on pause, so I don't actually know where I was up to. So I'm going to skim through this again. Some bits might be repeated. So the point I'm trying to make with the pound dollar is at the moment, with the impasse with Brexit, the pound is considered a risky asset. So the smart money is selling the pound right now, and they will do until we get some impasse with Brexit. The reason for that is if you look at the economic data coming out of the pound, it's pretty strong. It's I wouldn't say it's amazing, but it's certainly up there. There's some positive data coming out of the pound. There's out of the UK economy right now. Now we've got the Bank of England Governor Carney speaking later on this week, which will most definitely move the market in these pairs. But the reason why we're not going to see any significant buying pressure with the pound at the moment is because of Brexit, the unknown outcome of Brexit. It's something that's never happened before. We are increasingly heading towards an exit from the EU without any formal agreement between the two, between the EU and the UK, and with that becomes a lot of uncertainties. It might just be a big white elephant and everything will be okay. It could be a complete disaster. But the point is, it's unknown, therefore it's risky, and if it's risky, people, smart money don't want to be investing in that. The good news is, look how cheap the pound is right now. So once we do get over this hurdle and stability does return to the pound, we are most likely going to see a significant increase in the pound strength, possibly the immediate effect towards the 135.50 handle, and then of course I would say more towards this mid-range area here of 140. Let's just call it a nice round 140, 750. So that's kind of where I stand on the pound. So what do we do? So that's 2,600 pips. That would be nice. So what do? We monitor. So top-down analysis. In this case, draw out our significant areas. So we've got the all-time low here, monthly, weekly supplies, monthly resistance, weekly resistance, monthly resistance, so on and so forth. So we draw out those lines, and the way we do that is we want to look for whole numbers. So the institutes, so if you look at these areas, I'm looking at where on the monthly time frame where these areas reject the most. So we've got 1, 2, 3, 4, sort of 5, 6, 7 is a doji there, 8. So I'm not looking for exact touches. I'm looking for regions where there is quite a lot of support and resistance. Yeah, and then what you do, because it's on the monthly time frame, so you're not going to get exact price. What you then do is look for a whole number. So in this case, it's 1,300. The institutions like to work from whole numbers. They're not interested in buying. Can you imagine this? Can you buy me the pound against the dollar at 1312656? You know, they're going to round it up because they're interested in longer term trades. They're not interested in necessarily intraday trading with large money. So they want to hold these positions for weeks and months. So it would make sense to make life simple and buy at nice whole numbers. So in this case, this region was around the 1,300. And what you can do is you can mark it, put your line on there, type it in 13, 000. It'll automatically default to 1.3. Bang, there's your line. And then you can drill into the weekly time frame. You see how it's touching. 1, 2, 3, 4. Plenty of areas you see where it's touching exactly and not too far from. And then if you were trading around this area, so if, say your alert went off at this area here, you can draw in an area of interest. Now, a good rule of thumb, and I'm not going to go into this too in depth. So you've got the 1,300 as your marked out line. You go 20 pips above and 20 pips below. Boom, there we go. So now you've got an area, and if you look at that now, you can see, I'll zoom in, you've got an area now where support and resistance is pretty accurate within that zone, you see, and there's another one there. And then what you do is you drill into your lower time frames, set your alerts, and then you're looking for price action on the 30, the 1 hour, and the 4 hour time frames. And it's those time frames in these zones where you're looking to take and execute a trade. Okay, so the high time frames, monthly, weekly, daily, they are to give you your direction. Your support and resistance and your trend lines is to give you the areas where you want to be interested in taking a trade, and then you use the lower time frames, 30-minute, 1 hour, 4 hour, to help identify price action to give you those signal candles where you would then look to take the trade. Again, I'll go through all of this on my master trading course, but I just thought I'd reference it while I'm doing this video. Okay, so where was I? So I've plotted out my lines. I then set my alerts. Just give me a second. There they go. Sometimes they disappear. So what I do is I set my alert above and below. So this, what I want to do now is set that below this weekly supply. And I also want to set it below the current low. And if it makes a lower low again and then moves up, I would then move that to the lower low again. All I'm doing is tracking this trade in sort of real time, but I'm letting the market tell me, I'm letting the market come to me as opposed to keeping my eyes on it all the time. Okay, so this alert here marries up with this weekly low here. So I'm interested to see what happens at this level. As you can see, we've already bounced off it with a low here. Just get rid of that line, it's a bit distracting. And as we drill down, what I'm looking for is indications that selling pressure is backing off and, you know, we're finding a level. But we're not. You look at yesterday, it was a solid bar straight down, broken through the structure, come down. We are getting a bit of a pullback right now, but that doesn't mean anything until today's closed. Let's drill down. 8 hour, we've had a solid 8 hour bar. This is what a retracement kind of looks like on the higher time frames. So if this rejects from this level and comes short, we'll be able to see that written in the lower time frame. So we've had a solid 8 hour close, so that's indicative of continuation. So we drill down further. 4 hour, exactly the same, solid 4 hour bar. We've come back to retrace. We didn't break these highs, and this may well retrace and come short, but it's still showing signs of selling pressure. 2 hour, solid 2 hour bar. You've seen this retracement form now on the 2 hour bar, or 2 hour time frame. We've got a pin bar here. We might have a bit of sideways movement now. We've got some news coming in 5 minutes. 1 hour. Now here we go. This is where you can start seeing your price action. We've got a bearish engulfing. Bearish engulfing, indicative of obviously bearish pressure, selling pressure. We've got lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. So we've had a bearish engulfing underneath this support here. So the trend is down. We wouldn't want to be getting interested in any long positions until we've broken this high, but more specifically this whole number 12250. This is where we would look to break, retrace, and go long again. But at the moment, it's still bearish. 30-minute evening star formation, bearish sign. 15-minute, not really too much to show. We've got a bearish engulfing here, bearish engulfing here and here, and then a strong close on this 15-minute. So we've got a bit of indecision at the moment. This is leading into the news that's imminently going to come out. So yeah, hopefully that's helped you. So it's not on my hot list. I'm just keeping my eye on the pound pairs. You can also look at the pound index as well, the dollar index, to give you an idea on, you know, where the general strength is for that currency. But yeah, hopefully that's been a useful tip for you. It's not on my hot list. This isn't really trade planning, but it does show you how I monitor the market and sort of home in and find a trade opportunity. You know, these trade opportunities don't come out of nowhere. There's a process for finding the opportunity and then setting your alerts within your areas of interest, which is governed by the strategy that you're following. And you should never deviate from that strategy. You can improve the strategy and make changes to it, but you should never deviate of it without refining it first. So I hope I know it's been a long call, but I hope you found this call informative, and I will speak to you in the next video.